Good morning. Welcome to MCR Accounting Quick Tip number 9. Today I'd like to chat with you about the CPP Death Benefit. I know that's not anybody's favorite topic, but it is a topic that has a little bit of confusion around it. So it's worth getting out there. It's worth helping people understand. You know, the last thing you need is tax confusion and stress at a time like this. So first off, what is the CPP tax benefit? Well, every Canada Pension Plan member has paid for, as a part of their membership in the Canada Pension Plan, a death benefit that is intended to be paid to the administrative person that closes out their, you know, the things like funeral costs and the final things that have to be paid for and taken care of when a person passes. That is the intention of the CPP Death Benefit, and you may recognize that because lots of private life insurance plans also have similar types of benefits, depending on what they're called. This is more universal though. So let's talk about the confusing things. So the first confusing thing is the CPP Death Benefit comes on either a T4A or a T3 in the name of the deceased person. That's a bit of a confusion because what you need to know is you're not going to report the death benefit on the deceased person's final taxes. You're going to report the CPP death benefit on the taxes of whomever administrates the closing of this person's affairs. That could be, in a best case scenario, that would be the executor of the will. But many of us pass not having an executor. So whoever it is that's going to be stepping up or defaulted into this position, this money is intended that that person suffer or at least minimize the financial impact that taking care of these affairs will have on that person. So, now I've said the money has to be reported, and it does. So remember, everything is a bookkeeping question. So CRA has seen that money go out on a T4A or T3 or however it went out, and they need to see how it all ends up. So there may not be any tax consequences to you if you are the administrator. If all of that money was spent as a part of closing out this account, then you merely need to make a note of that and attach that to yours, the administrator's T1 form. They are not asking for your calculations, but it is always a good idea to have your calculations, and it is, of course, always a good idea to keep any receipts and records that you ever use for any claim you make with the CRA. So there is a place on on your T1 for filing the death benefit. However, if you spent the death benefit as it was meant to be spent, you're not actually going to file that there. What you will file in that location is any remainder, if there was any remainder. I've never actually seen that there would be. It's rather pricey to pass away in this country, so I don't know of anybody that actually has money left over from the $2,500. In any event, if there was, that's what you would report on that line. Otherwise, you're merely going to acknowledge that you are the person that received this final money and you used it for, you know, yada yada yada, whatever these final costs were. So not a pleasant topic for any of us, and unfortunately one pretty much all of us will have to face at some point or another. Have a nice day, have a good week. This has been an MCR Accounting Quick Tip.